Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Socket Mobile. Why did a single barcode scanner for the iPhone 12s skyrocket this stock to the moon today? And is this another hyped up stock not worth investing in right at this moment? Let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below. It definitely helps the YouTube algorithm. And consider subscribing and hit that notification bell if you'd like to hear daily stock reviews and recommendations from an unbiased source. So let's get right into it. So Socket Mobile is a producer of data capture devices. The company's products are integrated into mobile applications used in mobile point of sale, hospitality, asset management, commercial services, healthcare, and other mobile business markets. The company operates through mobile system solutions for businesses segment. Its cordless barcode scanners connect over Bluetooth and work with applications running on smartphones, mobile computers, and tablets using various operating systems. It offers a software developer kit, SDK, to mobile application developers to enable the use of its products with their applications. The company offers barcode scanning products for both one-dimensional, including imager and laser, and two-dimensional barcode scanning in standard and durable cases. Its 7 series barcode scanners are designed for handling as a standalone cordless barcode scanner. The D700 series barcode scanners are used in linear imaging, laser, and 2D models. So let's look at some of the news that really skyrocketed this today. So according to Investor Place, that Socket Mobile stock took off on the news of its iPhone 12 integration amid the world's expansion of barcode and QR code use. Shares it kind of went to the moon. It was trading at $2.40 a share. Now it's at $35 a share. So it's the first enterprise grade barcode scanner for the Apple iPhone 12 series. The Durish sled device, combined with Socket Mobile's capture software development kit, promises to enable the latest iPhones for enterprise use in for delivery services, stock counting, ticketing, and other application driven mobile services. The SDK was available for previous versions of the iOS device, so it's already been previously provided from all the other Apple products. So there's no real reason that it should have jumped up like this. The use of barcodes and two-dimensional QR codes, they said, has exploded in the wake of the novel coronavirus pandemic as contactless interactions became standard from the coffee shop to the warehouse loading dock. While barcodes can only contain around 20 characters, QR codes can contain around 7,000. An ever-increasing number of companies count on iPhone applications to run their businesses. Companies need to support a wide range of devices, especially if they offer their employees the option to use their own, said Socket Mobile's senior product manager. The move comes as Apple's iOS products become more integrated into the business tech landscape. According to ZDNet, Apple has an internal enterprise sales team for a long time, though it wasn't the recipient of particular focus. Socket Mobile announced in October that its contactless membership card reader had been certified for Apple Pay value-added service that allowed the ready to select and retrieve mobile passes from the Apple Wallet resident on the iPhones and the Apple Watches. Now let's go ahead and look at some of the fundamentals of the company. So the current market capitalization right now is hovering around $166 million with about 6.1 million shares outstanding. The market capitalization last week in comparison was only about $20 million. Quarter 3 of 2020 had revenues of $4.1 million with a negative total net income of $4 million. Earnings have declined about 44.9% per year over the past 5 years. While it's currently unprofitable, they have been profitable on average for the last 5 years. Now, are they in a good financial position? Well, the debt level is low and that considered a risk. The debt to equity ratio of 28% is considered satisfactory, and the debt is well covered by the operating cash flow of 30.12%. So let me bring it back here. So the average stock price target right now is $6 over the next 12 months. That's the analyst projections on this. And it's definitely off of its all-time high today of $35, and it's definitely tanking right now. So now going over a few of the analyst reports. Now, New Construct says investors should avoid Socket Mobile, and that is It has more downside risk than the upside potential, and that was before this crazy upswing. The CFRA report has it as a hold. That was when the price was at $3.24 a share. The street ratings is a sell on the company. It's driven by a multitude of weaknesses, which they believe should have a greater impact on any of the strengths and could make it more difficult for investors to achieve positive results compared to most of the stocks they cover. The company's weaknesses can be seen in multiple areas, such as a deteriorating net income, disappointing return on equity, and a weak operating cash flow. So fundamentally, this thing is flawed. So let's look at the valuation, profitability, growth rates analysis real quick. Then the most appropriate valuation measure for the company is the price to sales ratio. The price to book ratio is excluded because it most likely underestimates the company's book value by overlooking hidden assets, such as intellectual property, while the PE and PEG ratios are not meaningful. Therefore, the company seems fairly valued with a price to sales ratio of 1.2 times. That is in line with the technology, hardware, and storage peripheral median 1.26. That was last week. Now, the profitability analysis. Now, losing money on an operating basis, the company appears to be an inefficient company. While its profitability is among the best on gross margin basis, its bottom line, the net margin, is among the weakest in the technology, hardware, storage, and peripherals industry. Now, on the growth rates analysis, recently the earnings trend at the company has been weak. Over the past 12 months, the company has lost 80 cents per share compared to the prior period's break-even result. However, this performance was to be expected, as the typical company in the technology, hardware, storage, and peripherals also posted weaker results. Now, looking at the financial strength analysis, now the debt to total capital ratio, 22%, is in line with the industry norm, despite its increase over the last year, given that the company's operating profits are 18.81 times greater than interest payments. There should be little difficulty to be repaying debt. So my buy, hold, or sell recommendation on Socket Mobile. Now, here are my thoughts. So let's take this back from imagination land of $30 a share right now, $31 a share, and go back to reality land. So let me get the facts right. The company announces an enterprise barcode scanner product for the iPhone 12, and this goes to the moon because of it. Now, they were able to use their barcode scanners with the other iPhones beforehand, and now, since the iPhone 12 is a new addition to the iPhone, they announced that and it just goes skyrocket. This is a hyped up stock. This is disconnected from all fundamentals. This is pretty ridiculous if you ask me. It went from $2.41 a share to $34 a share. It's not like that the revenue from that alone will dictate $2 to $34 a share. Now, the barcode scanning market is dominated by about a dozen global firms, including Honeywell and Zebra Technologies. Now, for long-term growth investors that currently do not own this stock, this is a hyped up stock by the retail investors, completely disconnected from fundamentals, and I would avoid this stock at all costs right now. For short-term speculative investors, this would be a great time to take your windfall of profits and move on to the next target. This stock will come crashing back down soon. It will. So there you have it, folks. And as always, don't forget to smash that like button down below. Consider subscribing and hit that notification bell if you like to hear daily stock reviews and recommendations from an unbiased source. And by the way, folks, that's going to go down to about $5 to $3 a share in the next couple weeks. Believe you me. Or it might be a little longer than that, but this is going to come crashing back down. Until the next stock update video later today, folks. Ciao.